Well, we've identified the sort of second round effects of the trade war, which is consumer spending and firm investment. And the Chinese numbers this morning suggest that slowdown continues. The numbers missed across the board. I think we might want to pay a little bit more attention to retail sales. We've been focusing a lot on trade and maybe factory output. But let's remember that consumption has been driving Chinese growth for the last couple of years, and wage growth has been high, reflecting partly the one-child policy and the shrinking labor force. But if we start to see a real downleg in retail sales, that's probably going to have a bigger effect than, say, a moderation in factory output and dragging down the growth rate.
That's interesting. I know a big part of that drag in retail sales has been auto sales as well. Right. And just given how reliant foreign automobile makers are on those sales in China, I think that raises some concerns outside of the country too. But do you think this is a trade-related hit to consumers, or do you think this is just forces within the country aside from trade tensions that have already taken place?
Right. When we look at the trade, you have the direct impact of, say, higher import costs, and then you have to, buy less or move production. But then we have these second round effects, and we were talking earlier about the confidence indicators, and when the future's uncertain, you see consumers start to dial back on the bigger purchases, automobiles and other discretionary things, and you see the firms start to dial back on investment. The Chinese data don't really separate those in a way that we can answer the question, but the general trend of the numbers is still slowing growth, and that's consistent with that narrative.
And to what extent will the stimulus measures that China has pledged and money areas already put through help and lessen this fall?
Well, they will. One is they're lowering interbank financing. We're going to see fiscal stimulus on the infrastructure front. We may see some other things. So the authorities put a lot of weight on the growth target, and we think they're going to make the 6.5% more or less this year. But yeah, the kind of reaction function is two things. One is to make sure any downturn is kind of smooth, but the second one is really trying to support that growth target. We kind of hope them to move away from the growth target over time. We've been saying that for a while, but this year's performance looks pretty good. We'll have to see if we see these weaknesses go into 2019. Then we'll have to pay attention in early next year.
Yeah. Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.